Hello viewers, welcome to my next edition of learning about my stock investment rules. Next rule we're going to talk about is RSI indicator. RSI is called as Relative Strength Index. It's a very common indicator which most of the analysts use in their regular stock screening. This indicator helps you to follow the momentum and gives you a signal when to buy and sell based on some historical data. Stocks with upward RSI always considered as a reliable indicator to invest. We have seen this over and over and again that many of the technical analysts refer to this RSI as a key indicator. RSI primarily reflects on a few key metrics, which are average gains versus average loss in a period of time. Most common or widely used time period is of 14 days RSI. The RSI is laid out between 0 to 100 reference level, with a more favorable period is between 30 to 70 reference levels. As you can see in the chart highlighted, there is a 30 reference level, there is a 70 reference level. Anything in between these two reference levels are considered as most favorable reference levels. RSI layouts always gives a clear picture when the stock is overvalued versus undervalued. You can also call it as overbought versus oversold. Oversold is nothing but undervalued. Overbought is nothing but overvalued. Let's understand the concept of overbought versus oversold. If you're a beginner or any level, you need to understand and relate the price movement based on the key concepts. These are our core concepts for momentum. This can help you to be very proactive in the investment in stock market. What does overbought mean to an investor? As a common investor, what does that mean to me? The technical analysis suggests that the stock is due for correction because there is a pressure has pushed it beyond what many traders consider as a reasonable price. At this stage, you can see is considered as is out of the reasonable price range. And that's why we call it as overbought. Let's understand why stock is trending towards overbought situation. There are multiple reasons, and very common reason is that there is a positive news about the underlying company, industry, or overall market in general, which could lead to this overbought situation. When the RSI surpasses the 70 reference level, it is considered as overbought. And overbought means that the asset indicates its trading value is above its fair and intrinsic value. You can also call it as overvalue. There's an expectation that the market will see a price correction. And as you can see, there's a correction happen, triggered. The price movement is towards downwards. And it happens exactly at the overbought situation. Let's jump into an example shown here. As you know, Apple stock is a very common and heavily invested stock in the stock market, as highlighted in my chart. I do have a 200 days moving average indicator plus a volume highlight. And the key RSI indicator, which we are talking about, is highlighted here. As you can see, when the RSI is close to overbought level, the price loses its momentum and tends to pull back as the demand has fallen. You can also call it as overvalued state. In technical terms, whenever the indicator touches or crosses the 70 reference level, then there is a bearish signal exhibited where the price moves downwards. And you can very clearly see that the price is moving downwards, similar to how RSI is moving downwards. As an investor, be aware of this situation. This is key for any investors to take some profit out here. If you miss this particular signal, good chance that it will wipe out your profits. Always stay aware of this situation. And you can always stay partially invested if you are still in the profits, even though there is overbought sold and you don't have any losses there, it is okay to stay in the market or stay invested in this particular stock. And there's a common question asked in the viewers is that do you stay invested until the RSI hits that reference level 70, until the overbought signal is thrown or highlighted? Is there a scenario where the bearish signal can start even early before hitting the 70 reference level? The answer to that question is yes. And let's talk about that scenario next. Here's an example. I picked up a stock, which is Alphabet, very common stock. All my examples are basically talking about the most commonly invested stocks. And Google is one of the common stock in the stock market, heavily invested stock. And you can see here, in mid of 2022, between May till November timeframe, and that's a key period where there was a bad market, which led to mass layoffs and below par company performance and outlook. This was a period where the bearish market started happening. And you can very clearly see that the RSI indicator did not go all the way to the reference level 70 to give you the overbought signal or overvalued signal. And you can see that a classic example where it has hit the 50s, just hit the 50s, and the RSI started trending downwards. And you could see basically at this point, you can see that the pressure pulled the price down. Until then, you can see that the price was withstanding the pressure, downwards pressure, by moving sideways. And that's what happening. You can see the RSI, it also moves to the sideways, and it is highly fluctuating here. The moment it couldn't take the pressure, at that point, you could see that it tried to spike up over 50, and then it started pulling back. And that's when you could see the price movement downwards. Eventually, it gave up the trend and started going downwards. Always look for these signals in combination of price movement. Anytime you see a sideways movement here, that's a very clear indicator that some level of pressure is put onto the price. It could be that the stock price is losing its demand, or it could be some of the economic conditions which is causing this sideways movement. Even though it is a well-established stock, every stock has to go through this bad economy cycle. And that could basically lead the stock in a side movement. And at the same time, the RSI will also reflect the same level of movement, where your average gains are basically taken over by the average losses. And at the end, eventually it gives up the momentum and starts trending downwards. This is a classic example where it has not touched the overbought signal, but the bearish signal happened even early before hitting the overbought state, which is basically the reference level 70. Next, let's talk about the oversold or undervalued state a little bit deeper with an example. Here's an example for oversold scenario. When RSI hits or slides below 30 reference level, it is considered as the oversold state. The definition of oversold depends on context. Fundamental traders believe an asset is oversold when its price is lower than its fair or intrinsic value. You can call it as undervalued. For technical analysts, they consider the asset as oversold when they reach a certain level on the technical indicator, focusing on some of the historical data. Oversold assets are those that may be ready for a rebound. We have to be very careful here and we have to look for these signals. And this is an opportunity for us to onboard to the stock, closely monitor and take advantage of the upward RSI. Let's take a look at this tape with a leading stock, which we recently discussed about it. It's the Apple stock. When the RSI is close to the oversold, the stock is actually gaining momentum. And you can see that it has just crossed 200 days moving average. I laid it out. It's a pink line. See, it is a 200 days moving average. It has just crossed the 200 days moving average. That's where the momentum picked up. Whenever the indicator touches or crosses the below reference level, then the bullish nature exhibits. And that's a signal as an investor you have to be ready to take advantage of it, or basically to invest. At this point, you can basically invest on an incremental style. We will talk about what is this incremental buy strategy in later videos. But as an investor, at this point, I have to be very cautious. I don't want to put all my money at the same time. Instead, I want to take a smaller bets. Just buy a smaller batches of the stock until you feel confident that the trend is good and you start investing more. Incrementally invest more. Is there a chance that the reference level 30 can stock exhibits a bullish signal before hitting the 30 level? Is there a chance that the stock could basically give you a bullish signal? Yes, definitely where the company is performing well, beating all the expectations, and at the same time, even though the economical condition is not favoring the growth of this company, but still the company was able to perform to the highest level. In those scenarios, you could see before it hits the bottom 30 level, there is a spike up in the RSI, which basically led to the price increase. And you can see that at close to 30 level or just above 30 level, the momentum turned and you can see the RSI moving up. At the same time leads the price movement also upwards. As a stock investor, just following the indicator, is that good enough for being proactive? My answer to that is yes. It helps you to be proactively know whether to stay invested or bail out when things are not certain in the market. And I always follow the RSI indicator as one of my key indicators to make that decision. Viewers also asked me another question where they wanted to know, just following RSI, is it good enough to stay invested? Or you can also call it as RSI. When the indicator hits oversold level, is that good enough signal for me to go invest? To answer that question, first, you need to understand what type of trader you are. Day trader or a swing traders generally tend to invest in a shorter cycle. At this point, RSI should help you, however, to build your confidence more on this particular stock, conviction on this stock growth. You should also consider moving averages. My recommendation is also add an indicator called moving average into your decision tree. For example, if you're a day or a swing trader, always consider RSI in combination with the moving averages, like 20 days or 50 days moving average, which is a shorter period of time, to your decision indicator. Whenever you see the price is above 20 days or 50 days moving average and has an RSI signal upward direction or upward trend, And that's a point generally these short-term investors tend to invest. If you're a long-term investor, consider 150 days or 200 days moving average. For example, here in this chart, I've highlighted that I'm using a 200 days moving average. I want to stay longer in this stock because this is a well-known stock, heavily invested stock, and it's a really good stock. So in this particular scenario, I want to stay longer. So what I tend to do is I put a 150 days or 200 days moving average. In combination with the RSI, I pick the point as my buy signal point. And that's the difference between the day trader, swing traders, and the long-term trader. It depends on how fast you want to get out of the market or in your investment. Day and swing traders tend to stay for a short period of time. Long-term investors stay longer. Even though there are market fluctuations, long-term investors are okay to take that hit and they stay longer. To conclude, RSI is a key momentum indicator which you can use independently and help you proactively act on your investments. In addition to that, if you can also include the moving averages, it can provide you a better results. Please check out my moving average video. And I also discussed about a sweet spot indicator, which I personally use in my stock investment. Sweet spot is one of my key learning for me to stay invested in the stock market. And it achieves a better results compared to my early stint in the investment approach. Thanks for watching this video.